Joining us right now is our special guest, David Rubenstein. He's co-founder and co-chairman of the Carlyle Group. He's also the owner of the Baltimore Orioles. And David, there are so many directions we could go with you. I was thinking about starting with inflation because we have consumer price index coming up in about an hour and a half. But you sat down and started talking about some numbers that you looked back. We're celebrating our 30th anniversary, and
right.
You looked back 30 years ago. What struck you when you were going through those numbers?
30 years ago is a long time, but when I look back at it, the Dow started the year under 4,000 30 years ago.
Yeah.
And the big news was, I think in February of that year, the Dow hit 4,000, which was seen as a record. At the end of the year, it finished about 5,000. Today, the Dow's about 45,000, so it's gone up a lot. The price of oil 30 years ago, about $11 a barrel. And the most popular TV show 30 years ago were Seinfeld and Friends.
See, those don't seem that long ago to me. Those shows
one ended and the other one replaced the must-see TV on NBC.
Right.
I mean, they weren't on at the same time.
Not correct. And but the most popular TV show turned out to be the O.J. Simpson trial.
Yeah.
So last night I couldn't be at your party. I'm sorry. I appreciate your being invited, but there was.
Why couldn't you be there?
Well, I had to go to a baseball game.
You're in last place.
Well, hope springs eternal. But we won last night. But I just have a gift for you from somebody who also celebrated the 30th anniversary. It was 30 years ago that Cal Ripken broke Lou Gehrig's record of 2,130 games. So Cal Ripken asked me to give you this jersey.
Wow.
For each of you.
We each get one. Wow.
There you go.
David,
Cal Ripken jersey.
Here you go, Becky Quick.
Thank you.
And remember, think about this. He played 2,131 games to break the record.
Yeah.
Ultimately, he went to 2,632 games.
Wow.
So pretty impressive, 30 years.
I remember watching him going to see
I also have for you a bobblehead of your favorite baseball team owner.
Oh, wow.
Is that really of you?
This is, yes.
Does it nod?
Oh, that's great.
Here, now,
It does everything it's supposed to do.
here,
There you go.
I'm going to take it out of the box. So,
your
on this
own?
show, we did have lava lamps. We also had some bobbleheads, if I recall. There was
So I don't know. Do you have your own bobbleheads?
Was this your idea?
Well, it wasn't my idea, but they gave away 15,000 of them. I didn't. I wasn't my idea.
Can we get that in the camera there?
What fan do fans want a bobblehead of the
They gave
owner
away
of the?
15,000 of them, but
we like it, but I don't.
But it's going to be tough to do because of tariffs. We won't be able to make bobbleheads as readily or as cheaply as we were able to before. So this got in before the tariffs came over.
Then the tariffs are good.
Yeah, what's the cost of a bobblehead? Do you know?
It's a couple dollars.
The manufacturing cost of a bobblehead made in where?
Well, I think they're made
in China.
Made in China.
Country.
Yeah.
Made in China.
Well, that's the first thing you're doing.
Right. But maybe we'll be making
Gotta bring
bobbleheads in the United
manufacturing
States
back
soon.
to America, right?
Do we want to be bobblehead makers, sneaker makers?
I don't know.
We want to be AI people here.
But on inflation, clearly the
David,
Fed.
thank you, by the way.
The Fed next week will obviously do something we all expect. I don't think it's going to be a surprise.
You think it's 25 basis points or 50 basis points?
It'll have to be 25 basis points. If the Fed were to go 50 basis points, it would scare the markets that the economy is weaker than the market thinks it is. And I think it would be too much for the market to absorb.
I wanted to talk to you about this in particular because you were in the administration when we saw some runaway inflation back in the
Thank you
late
for
70s.
reminding me.
Well, yeah,
More than 30 years ago.
Well, as somebody who has lived through from an administrative perspective on this and watching how that plays out, lots of people are saying the Fed needs to focus on the jobs part of the mandate at this point because that's where we've seen the weakness. The inflation that had been anticipated has not shown up. How does that sit with you as somebody who has lived with runaway inflation?
When the Fed was set up in 1913, its mission was really inflation and keep the currency in reasonable shape.
It was just one
in
mandate.
1977, under the Carter administration, Congress passed legislation which said you should also worry about unemployment. And so the Fed has this dual mandate. It's like anything. What part of your body hurts the most? Whatever is injured at the given time. So what part of the economy is the thing we should worry about the most? Whatever is out of line the most. So if unemployment is very high, the Fed's going to focus on that. It's really not that high now. We're roughly about 4.2%. Inflation still is not at the Fed target. The target is 2%. We're still about 80 basis points above that. So I think the Fed is still worried about inflation. On the other hand, the pressure they're getting to lower interest rates is too much for probably in the Fed to withstand at this point. And you've got some new people on the Fed board who are probably going to...
I mean, wouldn't they just look at the data, though, and say the jobs picture is much weaker than we had anticipated?
I don't think this is political. I think that for a while, I've thought that the risk is more on growth than on inflation.
I think right now the concern has been inflation. Remember, we predicted a recession last year at this time. A year ago, people were predicting a recession that would happen this year. It didn't happen. The economy is in reasonably good shape. We're not growing at 5% a year, but we're growing for an economy our size reasonably well.
Half of what we thought were added in jobs, 75,000 a month for the past year. Instead, that totally changes everything. In the 4.2, the weird participation rate moves. Some people say it's closer to 5%, David.
Well, remember, the numbers are debated by many people. Some people don't think the numbers are accurate, as you know. And so I think...
Well, they weren't accurate.
The numbers will be adjusted, of course. But I think that in the end, the Fed is more likely to reduce by 25 basis points than to do anything else.
If inflation's the main thing, they should be raising by 25. If it's not a growth concern, they should be raising by, or at least
the Fed is
pat.
One thing we can be certain is the Fed's not going to raise interest rates.
No, I understand. Right? But if inflation really is the part of the dual mandate that is most important, right? I think they're fighting yesterday's battle from what happened. We went to 40-year highs in inflation. They were sitting on their hands, and now they want to. It's almost like they're fighting yesterday's battle.
Said that he only cared about the inflation side of
that. Should be. Some people think there shouldn't be two mandates.
Right.
There should only be dollar.
The Fed's target may have been lower than was realistic to get to. The Fed set a 2% target. Right. Maybe they should have had a slightly higher target, and they'd be closer to it. Unemployment is now a concern, and I think for that reason, the economy weakening a bit, and inflation is not such a big problem relative to what they thought. I suspect a 25 basis point cut will happen. And the Fed has been very good about telegraphing what it's going to do. The Fed has not surprised people. If they were going to do 50 basis points, we would probably know by now.
All right. Tell us what you think about the economy based on what you see from your portfolio companies, and tell us what you think about AI.
My firm just had its annual investor conference. We had people from all over the world here, large numbers of people. And basically, the people's view is, the investors' view is the economy is in reasonable shape, but they're not sure what the impact of tariffs is going to be. The impact of tariffs was widely predicted to be much more serious than it has been to date. And no one knows when the tariff impact will show up, if at all. We just don't know. But right now, investors have money. They're still investing money. Deals are getting done. Exits are occurring. And IPO market has come back. The number of IPOs have occurred. The Klarna deal just happened. Another deal that I'm involved with, StubHub, is probably going to happen in the not-too-distant future. And so I suspect that the IPO market is loosening up a bit, and that's probably a pretty good thing and a good sign that the economy is not in big trouble.